He's standing by, a bill director in Sydney, for her notion of what really moved the markets today. And Julia, key support levels, call it what you will, we kind of didn't make it today.
Carson, I think the market was always looking for a new catalyst to help drive the market forward, and we didn't see that today, so profit takers did come in. We did, however, see a new intraday high for 2009 for the Australian market before it drifted down lower, and by the end of the day we were down by 0.6%. We knew that commodity-based stocks would do a lot of damage after commodity prices decreased overnight. In fact, we saw oil prices breaking their 11-day winning streak, so we saw oil surge down by 2.8%. The big miners also losing ground. BHP Billiton, the biggest company on our market, down by 1.6%. Rio Tinto underperforming, down by 2.8%. We saw Ansell, though, rising 8.3%, and that was on the back of a broker upgrade. And in fact, if we have a look at the market, the defensive sectors did quite well. We saw the staples, the healthcare and the utility sectors all outperforming. In terms of volume, it was a pretty healthy day, about $5.4 billion worth of stock trading hands, but with no new catalyst to drive the market up further, we did see the market drifting today.
Just how important is that consumer confidence print in the US? The fact it disappointed to the downside so much, what does that tell you?
Well, consumer confidence really was a main driver, not only of the US market, but also of commodity prices overnight. And that was a key reason why oil prices pulled back from their 11-day gains. So those consumer confidence price index impacted on the Australian market in two ways. One, through the lead from the US market, and then secondly through the commodity pricing as well. And the Australian market is made up around about 35% of our resource sector, so a big influence on our market today.
Market seems to think that the worst could be over for Macquarie. Its shares were sitting up today at a 10-month high. What did you take from the AGM?
Well, I guess there were a few things we were looking for. Any sort of profit guidance, also any sort of insight into Macquarie's strategy going forward and what it's likely to do in terms of its relationship with some of the satellite funds. Now, in terms of guidance, we did get a bit of guidance for the half of the year that we're in at the moment, and they're expecting profit to be between $261 to $604 million. So anywhere between first half and second half profit in the last financial year. Of course, in the second half of last financial year, they were burdened down with the Lehman Brothers crisis. So in the last 4 or 5 months, they have seen things substantially improve. It does look like they're going to also be looking at expansion, and they're going to be looking at the US and UK for opportunities as well. So we did see Macquarie Group shares doing quite well, up by 0.8%, but Macquarie Infrastructure Group actually went the other way with a decline of 7.8%. And I guess no news has been bad news for this stock. Investors are really waiting for a strategic update from this company, but that's really not due to the 20th of August. So while we did see Macquarie Group shares up by 0.8%, not a good day for MIG, down by 7.8% today.
Macquarie Capital as well, the kind of Achilles heel. Can that be turned around anytime soon? They talk about, in this case, timing and size of transactions leading to those losses.
I guess it's a big question mark over Macquarie at the moment, and although we did get a little bit of details, there's a lot of questions to be answered going forward as well, especially in terms of the model of Macquarie Group and some of the satellite funds. In the last few months, we have seen Macquarie trying to distance itself from some of the listed funds that it has on the Australian share market, but Macquarie also saying that it has no plans to move away from some of the management of the unlisted funds. So a lot of detailing in that AGM. Overall, the market seemed to have taken a positive view. We've seen Macquarie shares in 2009 up by a massive 50% this year so far, and in fact increased by a massive 150%.
Can we talk the NAB as well? A deal's been done with Goldman Sachs JB Ware. What will, in essence, be different from tomorrow from this deal?
Not a big surprise. The market has been talking about this for a few months, but essentially what's happened is NAB is going to take a large chunk of the private wealth business of Goldman Sachs JB Ware. So it's going to take an 80.1% stake. Essentially, I guess it's a good strategic fit for National Australia Bank, who have been trying to increase their wealth management arm. It will mean that they will get the cash management accounts, the funds under advice, which are about $38 billion, and about 211 advisors. But then you have to wonder about the private clients, whether they're going to be happy to move over to the National Australia Bank or the JB Ware brand, as it's going to be rebranded, and whether the advisors are going to be happy to move over and move their services services to a bank as well. So some big hurdles going forward. It's a good strategic fit for National Australia Bank. It's not going to materially impact in its first year, but really expected by the market. So not a huge impact on NAB share price today.
Goldman's a bit peaked that they don't get naming rights.
Sorry, I missed that.
Would Goldman's be peaked that they don't get any naming rights?
I think Goldman Sachs is still going to retain its advisory services, so it does look like the businesses are going to be split out into the private wealth management, which National Australia Bank has taken an 80.1% stake in, and Goldman Sachs JBWere under that brand will still keep some of the advisory services, the corporate advisory services.
Very good, Julia. Have a good afternoon and evening, won't you?
You too. Thanks,
All
Carson.
right.